Hi, Chris here, checking out the market action for right now. So I wanted to talk about first some signals in the longer term, so we'll go with the simple daily chart. I think that we're going to start to see some divergence signals. So what I'm seeing right now, like let's just throw up the 14-day RSI and the simple momentum. So what I'm seeing is starting to look like divergence signals. So in the RSI, memorize this part of the chart. 1, 2, okay. In this part of the chart, it almost looks like we are building a head and shoulders formation. So we have 1, and then we have 2, and then we're on the 3rd right now. And just in regards to like the direction of the open today, let's say today opens lower. That's going to put us, like let's say the S&P closes down 5 points. So the futures are down about 5 points right now. That's going to put the RSI to about right there. Maybe a little less, but it's going to move it down. So that's really going to look like a head and shoulders. So for a breakout, just eyeballing it, we're going to need a move down in the RSI equivalent to about, I would say, at least 1% in the, no, I'd say 1.5% in the actual index. Alright, so that's the first thing I wanted to look at. Second one, and this is actually a lot more obvious, it's a divergence signal. Notice how each time we were making, well, first off, this was a positive divergence. You see we made a lower low, but the momentum started going up. And then we started keep going up, and then this was our ultimate high, which I'll make green, and it's followed by a new high in the actual price, and then after that we make another new high, but the momentum is actually declining. So there's a divergence right there, and looks like it's going to pretty much follow suit. So bearish divergence, and then this one was a bullish one. So you see right there how it predicted the bottom. You might see right here how it's going to predict the top. Okay, so next on to the shorter term formation. I think that the market's starting to run out of steam also, because in the short term, if I go in here, and this is just based from experience, when the market undergoes like a complex correction, and just for reference, complex equals sideways versus like a sharp correction, which happens really quickly. A complex sideways correction, that normally means that the actual underlying trend for any time frame is starting to weaken. So in the last 5 days, you look right here, and it's obvious that the underlying trend for like a 5-day chart or like a 5-minute chart, so super short term, was up. But then the correction that we had, it wasn't a like swift down movement like I'm drawing with this red line right here. It was actually, hold on, there we go. It was actually this thing right here. So it was, you could actually zoom in and say, you could say, oh, is this some sort of very sloppy triangle? Yeah, sure, we can say that. And then it broke out to the top side. But anyway, when there's a complex correction, that means the underlying trend, which for the 5-day was up, is getting pretty darn weak. So we started moving up, and if I actually do my ratios top to bottom, or let's go bottom to top with this one, or yeah, top to bottom, and then I take this one at this major bottom right here, you're like, okay, that didn't tell us anything. But what if I do the 168 one? Pretty darn close to the top, right? If I actually go to the close of that day, it matches pretty well. So you would say that this was an extended one, and then you would say that this is a kind of weak one. Alright, so that's what I'm seeing today in the market. If you want to short, you might want to wait until tomorrow after the ECB meeting. Just a lot of event risk that's going on. Alright, thanks for watching.